Hello guys and welcome to volume 6 of my Forex market breakdown. Now before I start things off, I just want to say it has been about 2 weeks before I last posted on YouTube, and I just want to apologise for that. I did obviously promise consistency on this channel, but unfortunately things came up during the week, and I wasn't trading myself, so I took the week off and didn't post any videos. But following on from my last video, I just want to catch up on one trade which I posted across all my platforms: YouTube, Instagram, and TradingView, and that is the US dollar to Japanese yen short. Now, this was covered in my volume 5. You can go back and have a look and watch that video. We broke this pair down in much detail, and I also posted this setup on my Instagram and my TradingView on March the 5th, as we can see up here in the top left corner. Pretty much, price had increased, and we were rejecting 1200s, forming this kind of short-term consolidation zone. Personally, for reasons I mentioned in the video, I was looking for a short dive back into 111,500s. Let's go ahead and see what happened on this pair. In actual fact, that target was smashed. However, what happened first was we did have one more test of 11200s, came up, popped up, probably took all the stop losses out from the earlier short traders, and then we consolidated for some time until eventually, boom, we popped down and completely declined in price all the way down. So this was an excellent trade, as I say, posted it on all my platforms, so make sure you're following my TradingView and Instagram, and also subscribe to the channel just so you don't miss out on any future opportunities. However, moving forward, we're going to go ahead into the chart analysis, and we're going to start with the euro to Australian dollar. Now, this is likely to be one of the only clear pairs that I break down in this video. It's actually one of my favourite pairs to trade at the moment, but the reason being why there's probably not unlikely to be any other pairs in this video is because it is Monday morning today, and I did do all my analysis on the weekend, and there didn't seem to be any pairs that were offering the trading opportunities that I like to take. Unfortunately, I was aiming to get this video recorded and uploaded last night, because pretty much I have a bearish bias on euro to Australian dollar, and I was expecting a sharp decline from the market entry, which was here. I wanted to get this one up last night because I generally thought that we would see some consolidation on the market open and then a sharp decline, which did occur, but I didn't get it up. So it's time to re-establish my bearings on this pair and see where we're heading next, really. So starting on the higher time frames, I've mentioned this before in previous videos, but on the monthly time frame we sit at a very strong area of interest between 1.600s and 1.6200s. These two key levels here. Now, I'm not going to go into too much detail about these levels because I have done in previous posts and videos before, but if you go back on the monthly time frame, you can see plenty of price action rejecting this area, both as support and resistance. Now, because we've been trading below these levels for some time, we are using it as resistance. We can even go back here and just see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 rejections of this level, until eventually it was broken, and then price just seems to be consolidating and being a bit, indecisive on where its long-term movement it is next. Moving on into the weekly time frame, however, when we last covered this pair, I mentioned that I was no longer looking to trade this pair short because we had this strong weekly candle that broke above 1.600s, and if you remember correctly and you've been with us since the start, that was my consolidation range resistance, and I was expecting a sharp incline back up to 6200, sorry. But with that in mind, it didn't occur. We must always remain nimble and flexible in the markets. If one idea isn't occurring, we should be able to shift bias almost immediately to catch the shifts in trend. So what I do now, by looking at this weekly time frame, I see, okay, if we were just to move the resistance up, we can find this This blue zone here, which I've marked on, which is actually a daily resistance, but we can see it quite clearly on the weekly. We've had 1, 2, 3, 4, 5, 6 resistance rejections of it, and even if we were to drag it to the far left, we can see that previously it acted as strong support when price made its previous higher low. There we go, straight through. So we got 1, 2, 3, 4, 5, 6 rejections of it as support, broke below it, turned into resistance. And then what we can also do is get out the Fibonacci tool and establish one swing low to one swing high. We haven't quite got the Fibonacci touch there, but actually I don't think it's necessary because I do have a lot of confidence in this support turn resistance zone now. Because my style of trading is more of a trend reversal strategy, it's always the case of looking for, okay, we're in an uptrend, higher lows followed by higher highs. We are then looking for the shift in trend from a higher high, higher low, higher high scenario to what becomes then a higher high to higher low to lower high to lower low, which I think we have got coming on here. So we had the long bullish rally up into here, which broke 1.6200s. We had a sharp wick here, probably taking out stop loss hunts for previous shorters, and then we came down, and then it looks to be forming our initial lower high. So if I was just to circle it here, going to make it a bit more clearer for you guys. So we had our swing high here. Just go and highlight that a little bit more clearer. Swing high here, came down from the swing low here. Now, okay, we would expect this to then form a new higher high. We would expect price to rally and come up and make new highs, which I thought was going to happen after this strong weekly bullish candle. But in fact, now remaining flexible and watching this pair over the last couple of weeks, I now believe that this is our initial lower high zone here. We've got the confluences, and the resistance, and as I go through the lower time frames, we've got a lot more confluences building up. So now what I'm expecting is price to have a sharp decline from this zone. Pretty much, as long as we do not break these resistance zones here, then I honestly believe that price is due to come back down and at least make new lows. Obviously, when I was going to post this video up last night, I was looking for more short-term targets, which actually would have been hit if I did post it up last night. But now that I've got to re-establish my bearings, I am looking for those longer-term targets. So let's just go into the daily time frame here and have a look at price action. Once we hit 1.57500s, which is short-term support, it seems that price has been consolidating. If you remember correctly, this was the basis of my consolidation region in the last 2 weeks YouTube videos. So resistance at 1.600, support at 1.57500s. We consolidated in between. This was the bullish candle where I thought price was then going to make new highs, but in fact price put in some strong bearish candles to reject this zone, actually falling below its previous higher low here, which then to me suggests a shift in the overall trend. We came up, daily candle pinged up, hit resistance at 60500s, came back, closed below 1.600s, and now it's establishing potentially what I believe is the next bearish down leg. We could even go in here and just double check what the Fibonacci is on this zone. I might have been confused with what it was on the weekly. Yeah, see, there we go. It was actually the daily level where the Fibonacci was working. So we had this break of the short-term bullish trend, formed a initial lower high, rejecting both resistance zones and also falling below both the 0.618% and 0.5% Fibonacci. Just adding up those confluences on the daily time frame. Moving even lower. This was a setup I had last night, and I am a bit annoyed that I didn't post it because our first target would have been achieved by now. But pretty much we were sitting around these two candles here for our before the market opened. Now if I just quickly head into the hourly time frame, What we have for this yellow zone was a short-term area of interest. We popped up, we used it as support here. We used it as support here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 rejections. We fell below it. Unfortunately, we didn't use it as resistance. We smashed straight through it, came back down, bit of support here, traded back below it, and then we consolidated on that zone. We can actually see this consolidation a little bit more clearly on the 4-hour time frame. So we had that area of support here, and then as we can see, when we broke below it, we had 1, 2, 3, 4, 5, 6 rejections off this zone. And after seeing all of this, I believed that, okay, we were then due a sharp decline in price, first to 59400s, and then secondly, all the way down to 5900s. Now, 59400s has been smashed and hit, so target 1 has been achieved from last night's analysis, and I am expecting a further decline, maybe today, tomorrow, straight down to 1.5900s. However, that's not a lot of pips for you guys, where I've fallen short and uploaded this video quite late. I mean, 5900 is what? 54 pips, which wouldn't really provide an adequate risk to reward, bearing in mind that I would prefer stop losses above 1.600. So, what can we look for the longer term outlook on this pair? If we're shifting the trend, what you want to see is, especially if we're shifting the trend from a bullish to a bearish one, what we want to see is higher lows to higher highs, shift from lower lows to lower highs. So now that I believe that we probably have our initial lower high formation up here, I am then looking for price to quite evidently make lower lows. Now, where would they occur? Well, if we are shifting in the trend, the already low is this point here. However, I don't like to target random numbers. I like my targets to be on round numbers of areas of interest. So where in reason is the closest area of interest for this? Well, it would be the previous range support at 1.57500. It all kind of comes together now, almost like a painting. We've got all the pieces, we put them together, and pretty much that establishes my bearish bias. I believe that price, if we can still remain below 1.6 and more specifically 1.60500, I believe price is in for a decline back into support at 57500s, right back down here. Now what I'm going to do is, by the time that this video is uploaded onto YouTube, I'm going to have a full written breakdown on my trading view. So please go ahead and make sure you're following that. It's the same as my Instagram tag, which is Nick Lindley FX. Look here, yeah, Nick Lindley FX. So make sure you go ahead and follow and check out the written ideas I have there. As I say, by the time this video is uploaded, we're going to have the euro to Australian dollar short breakdown up and ready to go. Remember guys to also go ahead and follow my Instagram, the same tag, which is Nick Lindley FX. And if I just go into the previous post, remember we talked about USD to Japan. I did post this one on 7 days ago. This was just a quick before and after snapshot, which I showed you guys at the beginning of the video. And that's where I posted it initially, on March the 5th. So what I'll be doing is posting euro to Australian dollar up there again. I won't be breaking it down, I'll just be simply posting my targets. And I do this for a lot of pairs ongoing throughout the week, so make sure you go ahead and follow my Instagram as well, Nick Lindley FX. I do apologise guys if I have sounded a bit off on this video today. I am ill. It's one of the main reasons I didn't get the video and things uploaded last night. I just wanted to get into bed and pretty much sleep, which I have done now, but I'm back ready, backing up, back in active in the Forex market, looking to make a couple of trades this week, more in specific, only really across euro to Australian dollar. If we don't have a look on the short, lower time frames here, if I was looking for an entry, as I say, my preferred entry would have been on the market open, which I didn't quite establish. So maybe we come back up and we form some sort of lower high, which could come around 1.59700s, or kind of any area of support that coincides with this previous build up of price. let's just go ahead and do something like that. So if we came into this sort of zone and we formed some bearish candlestick formations across the 15-minute to hourly time frame, I'll be looking for a sniper entry. And remember what we were saying across the longer time frames, the target being 57500s. Now it's a lot better setup than the one that I was going to post last night, because although the one last night would have already profited, it would have already hit our target, this one borders just over 200 pips. I mean, a clear secure stop loss would be above 1.600, which could offer you some great risk to rewards around 1 to 5, which actually I believe is a very good risk to reward. So anyway, I'm not going to waffle on anymore. What we're going to do is leave that, guys, to you. Remember, coincide with your own analysis. For me personally, this is the trade I am looking to make, and I will be posting my analysis up on my other platforms. So make sure you follow, hit the like button, hit the subscribe button, and also comment if there's any pairs that you would like me to cover in next week's volume, because I am open to suggestions. I am a man that enjoys a little bit of a challenge, especially when it comes to chart reading. I like to get into new and unfamiliar pairs just to offer an outlook for you guys. Anyway, see you next week. Enjoy. Have a great week. Bye.